So as most of those of you who've been to DTC Live before know, this is always our finance themed section at the end of the day. And we were putting together this panel and we noticed, look at all these incredible women. So we thought, let's make it a women's panel, especially because I've just had a show out on Sky, which is all about female entrepreneurs. So thank you guys for coming in and joining us. So everyone's sitting under their picture so they can be all easily, everyone knows who's who. But Kirsty, do you want to start and just tell us a bit about who you are and what you do?
Hi everyone, I'm Kirsty. I work at JamJar Investments, which is a 100 million consumer VC based in London. We were founded by the Innocent Drinks founders, so do a lot of retail food and drink investment, but we also do a lot of direct consumer investments. So we invest in Wild and Surrey and Skin and Me and Yapida, Tails Dog Food and various others.
A lot of those brands have spoken at DTC Live conferences as well. Yeah, amazing. Hannah.
Hi guys, my name is Hannah. I'm here from Conjura. Conjura is an analytics platform that's ultimately a profit-driven growth engine. We have our D2C analytics platform, but we also support multiple VCs and brands when they're doing e-com due diligence, and that's what we're here to talk about today.
Brilliant. Anna?
Hi everyone, I'm Anna. I'm MD at eComplete. We're a private equity firm specialising in D2C, and we're also a growth agency partner. We were founded by Paul Gedman and Andy Duckworth, who are some of the ex-chief execs from THG days. Andy from MyProtein and Paul from the beauty division. So we're definitely e-com through and through.
And just Anna, you acquire brands and manage campaigns and drive revenue.
Yeah, so we acquire businesses. One of them was here today. It's no secret. Current Body is part of our portfolio, and we recently completed on an acquisition on the 22nd of December at 4 p.m, just in time for Christmas. And we are actively looking for our next acquisition. We would like to do another 1 or 2 this year, so definitely come and find me. I'll be around for drinks at the end.
Amazing. And Georgia?
So my name's Georgia DaCosta. I'm Global Partnerships Manager now for SellersFi. Yeah, double the work, lucky me. We are a global financial technology company, and we help brands, merchants, retailers on their growth journey with financial solutions. We have a suite of financial solutions from your traditional, working capital products to business checking accounts. We also have a digital wallet, insurance as well. Yeah, we've got quite a lot of products, but yeah, far too many for a salesperson to go through.
Georgia's always says things how they are, which is fantastic. Okay, so Kirsty, coming to you first. So JamJar obviously owns an amazing portfolio of brands. When you go on your website, you're like, wow, that's amazing. They're all really well known. What are you guys looking for? What's the criteria, and how has criteria shifted over the past 18 months?
Yeah, so some of you might have heard me say this before, but very crudely, we look for people, product, and potential. People is, a brilliant team, and we've actually got 15 criteria that we score founders on, from a kind of -1 to a 2, like a real spike. And those are kind of split into 5 buckets across kind of commerciality, consumer focus, building a team, things like that. So the
founder's capability.
This is the founder's capability. So we spend quite a lot of time going deep on the team, and I can talk a bit more about kind of the things that really matter and not later. Product is, do consumers really love the product? And that is a combination of kind of us looking at the product and really falling in love with it, but most importantly, looking at a lot of the data. So, the repeat rate, the cost per acquisition, the word of mouth acquisition, all those kind of things that show that consumers are really loving it. And crucially, it's category leading metrics. So very dependent on obviously the category and what the repeat rate might be, but we want to see something that is really top tier. And finally, potential. So we're looking for businesses that we think can exit for 250 million. And we're taking kind of a 10 to 15% slice of that. It's a function of our fund size. So, we see a ton of incredibly successful businesses that, it's difficult to see getting to that scale. That's not to say they're not brilliant businesses. It's just we've got 100 million funds, so we need a certain scale to get there.
And what are the criteria for a brand that can exit at 250 million? I'm sure it's something that lots of people would like to be able to do. Yeah. What needs to be true in order to achieve that?
Yeah, I mean, you need a decent revenue number in consumer. We've seen anything on exit multiples, again, massively depending on categories, being anything from less than 1 to up to 5x.
Of revenue.
Of revenue. And obviously it's very dependent on profit as well, so it's quite difficult to give that kind of answer very specifically.
Not any brand can exit for 250 million.
No, totally not.
Yeah.
There's a lot of brands. There's a lot of brilliant businesses and brilliant consumer businesses that I think would go for 10 to 50. But it's just not. It wouldn't fit with our strategy of investment. And I think the thing that's probably worth saying, given it's DTC Live, is that we very much believe that D2C is a brilliant place to start your business, but it's not where you're going to finish. And actually, to get that big multiple, you want to be in an omni-channel business, probably across several geographies, and probably have a few categories going.
In order to get to those sorts of price exit valuations. Amazing. Okay, brilliant. So Hannah, the Conjura technology is incredible. We use it in D2C Live. Just tell everyone what it does.
The Conjura technology ultimately pulls all your e-com data together, all your ad spend, all your historical ad spend, and everything you've ever done online as a D2C brand. We pull it together in our platform, and ultimately we can either surface your day-to-day profitability, like your contribution and how brands operate on a day-to-day basis, or we have an automated 80-page report, which is what D2C Live use, that is an automated DD, and it speaks to all the KPIs that Kirsty's just talked about and more, and in a greater level of detail. And it's from that detail ultimately that a founder can approach somebody like JamJar with what's my LTV to CAC ratio, what's my LTV, what's my retention, and where retention is a proxy for product market fit, and ultimately we do the heavy lifting around your data so you can build your story, and that's what our technology does.
It's very much used by funds for due diligence as well, isn't it?
Correct, absolutely. One of them here is a heavy user of our technology.
A heavy user.
There is.
That's not as bad as it sounds.
No, but we do a lot of due diligence for eComplete. I think there's quite a few live on the table at the moment, and it is that technology, that orchestration, and I suppose the depth of detail that we can bring to the people like eComplete to make your decisions and make your investment decisions. Because I don't know what the ratios are, but for every brand that comes to fruition at 4 p.m. on the 22nd December, there's maybe 10, 20, 30, 40 that you're looking at that need that initial DD, and that's what we support on.
And what are some of the things that commonly come up from your report that brand owners or management teams don't know?
Yeah, it's a really interesting question because, founders especially have a lot of passion for their brand, and we've heard this today, they do know their customer inside out, but often things that come to light are, what is the true LTV of the customer? It's a hard metric to really accurately calculate, and it can be quite positive or it can be quite a negative story. Other things that have come to light that are quite surprising is, often people think they have a really great retained pool of revenue that are coming back to them time again, but actually how are they getting those customers back? Some brands are cannibalizing through huge discounts. You're like, when you actually see it on the paper, you're like, that isn't going to get you anywhere profitably, anywhere quick. So it's things like how you're actually driving the customer to your brand day to day when it's shown to you on paper can tell a positive story, a negative story, but there's some of the interesting surprises that have come to light that people have questioned the data, but the data is normally always right.
Brilliant. So Anna, as a regular user,
A heavy user,
of the Conjura platform.
It's okay.
So what are you guys looking for then? You mentioned you want to acquire 3 to 4 more brands this calendar year.
Maybe two this year potentially.
Okay.
Let's see how we get on.
So you've acquired Current Body, which is a very famous, probably hero asset. What sort of things are you guys looking for, and what's your investment strategy?
So it's kind of interesting with eComplete, with Paul and Andy being our CEOs, they are coming from an e-commerce background, not private equity background. And so their risk tolerance is slightly higher than maybe traditional private equity would be. And I think Current Body is a good example, and I'm sure Andrew wouldn't mind me sharing this. I've spoken about it before, but Current Body a few years ago was very reliant on third-party retail, as you mentioned, therefore it has an impact to GP. You look at the nature of LED devices as well, it's really high AOV. and how many face devices does one person need every year. So repeat rate is really low. So when you factor these things together, a traditional investor or a traditional private equity firm might be slightly deterred, whereas Paul and Andy are looking at something like that and seeing room for opportunity, whether it's international expansion, hunkering down on the own brand element of it. And so I think we're probably unusual in that sense, where we aren't so persuaded by the traditional KPIs. And in fact, the acquisition we've made recently would have scared a lot of investors off. The warehouse looks like a shed. And it didn't have a
You're not allowed to say what this is. It's a trade secret.
No, this one's public. Is this one public? Give me cosmetics, it's called.
Okay.
And yeah, it would have scared a lot of people off. The warehouse wasn't operating properly. There was a lot of backlog of CS tickets. They were behind on their Black Friday orders. And that's not necessarily something that would deter us going in to acquire something like that, because we can see the opportunity from the data provided by platforms like Conjura.
So what sort of things are you looking for then for this year?
Oh, so we are category agnostic. So, beauty, health, sports, apparel, we're not picky. I would say probably, I typically, where I think we really help a lot of brands is in that segment between 20 to 50 million. I think they've probably done a really good job in the domestic market, and maybe there's some optimizations within their marketing. Maybe they've not made the most of TikTok Shop yet, for example. But really the next stage of their growth is going to come from internationalization, and that's really our bread and butter. Our story at THG was taking My Protein into 40, 50 territories. Similar story for Look Fantastic. That's the bread and butter skill set at eComplete, and where I think we can add a lot of brands, add a lot of value to the brands that we acquire.
Yeah, I mean, I agree. That's definitely what you're known for doing. And how do you think, from a brand point of view, if they're talking to you, then it helps them feel when they see you've got the operational experience of an agency, a performance agency, and internationalization?
I think it's a really compelling story, and I think, if I'm being candid, we weren't the biggest offer on the table for Give Me Cosmetics, but we are founder friendly. And then when you look at someone like eComplete, and it's not just about a big takeover and the founders getting booted out and it's kind of aggressive, we've got the people ready to deploy into that business from day one. That's quite unusual when we hear about the Bondi Sand story. Got a crew of people ready to go into whether it's TikTok Shop or your warehouse. So that's quite reassuring, because you're surrounded by e-com experts from day one who know what they're doing, whether it's supply or finance. The access to the data as well. I think that's very reassuring to take a business owner through where we see the opportunities, where we see the efficiencies. And I think the thing that's really scary, and we've spoken about it a lot today, is supply chain. And that's probably where we add a lot of value, not just to the businesses we acquire, but also the brands that we partner with as well, supporting them on entering those new territories. So hopefully it's a good journey for our founders.
Thanks, Anna. So Georgia, we've been talking all about equity-based funding and essentially purchasing of brands in their entirety or in proportions. Obviously, you guys are debt-based lenders. Can you just explain to everyone why and how that's different and beneficial to some founders in some circumstances?
So I'm sorry, I've got the sexy topic of debt. So why do we use debt? I mean, obviously equity is a great route, but it is decreasing, especially in the consumer space. But yeah, I think, sorry, what was the question?
Why? Just tell us about the debt-based funding solution.
You want to hear all about debt, guys? I can tell you all about debt. So obviously there's so many types of debt. I'd say it really depends on what stage you're at. Very early on stages, you would be using credit cards. I'm far too familiar with the credit cards. Then you move on to things like MCAs, which is a merchant cash advance. It basically is like a lump sum, and you pay it back through a percentage of your credit card sales. It is very notoriously expensive, but hence why people use it very early on. And then you move on to things like revenue-based finances, such as, the Wave Flyers of the world, Uncaps. they're great for, if you want a quick cash injection. They typically have a lot shorter repayment profiles, so around like 6 months. It's great if you're looking for something really quick and you've kind of left it to the last minute, but again, very notoriously expensive. And also with that, when you pay you pay back like a percentage of your sales, which is quite difficult. If you are at a high growth phase, you're getting to a bit more of a mature phase where you want a strategic plan. It's really hard to kind of model into your forecast for a lot of CFOs out there. And then you move on to the best option, which is revenue advances that we do at SellersFi, again, which is a lump sum, but it's on a fixed repayment plan. So essentially, you know exactly when you're paying and how long. Typically, the terms on this would be 12 to 18 months is what we're seeing at the moment. And then as you kind of grow even more, this is kind of the product that everyone else wants to end up on. It's the credit limit. So it basically allows you to draw down funds as and when you need it. And then with each drawdown, that would turn into a traditional kind of term loan, but almost like a bank loan. And then obviously you've got banks as well. But I don't know if anyone's ever tried to get funding from a bank. They are quite skeptical about e-commerce, and that hence why we were created. And they also are very, very slow. And with alternative lenders like SellersFi, it's a lot quicker process. It can take around 48 hours to a week to obtain funds from us.
And what types of things will the brands be wanting to do with that money? Like, what are the challenges they're facing that's led them to come to you guys?
So I'd say really, we do deal with a lot of like the day-to-day short-term expenses, hiring, paying salaries is so important. Stock, you don't want to miss out on a great opportunity with a retailer because you haven't got enough stock. One thing that I saw a couple of years ago was essentially we helped a business with a huge market change, which would inevitably happen because of COVID. Cath Kidston was one of our clients, and they were bricks and mortar, mainly, and they needed to pivot as quickly as possible, given obviously we couldn't enter shops. So they ended up, using our funding to adapt to the market, and I think that's what, especially even now with COVID over, it's still, there's so many market changes. So it's having that kind of blanket to be able to pivot and adapt. And also we see a lot of our clients are seasonal. If you are having a lower month, then you are someone that, the sales really rise at Christmas. It's being able to kind of get yourself through those lower seasons where you aren't generating as much revenue. So we help with a lot. I think cash is just so applicable to so much. So I could go on and on.
Well, we are wrapping up this panel, but before we do, one piece of advice for brands when talking to each of you, because each of you are in very unique situations with people who will want to talk to you and get your expertise. Kirsty, when talking to you, what do brands need to know, say, or do?
Yeah. Okay. So going back to the point I made about the team and founder criteria, we did an exercise. We've invested in 70 plus companies or something, and when we looked at the delta between the best performing companies and the lowest ones, the biggest delta in score was around how well the team could ruthlessly prioritize. So just focus brutally.
So talk to Kirsty about how you're prioritizing. Hannah?
Profitability. Know your contribution margin, know how profitable your business is, and know your numbers inside out is what I would say. We've heard profitability from the top of today's session, and I think it's going to be around for a little while. Cash is king, and if you are profitable, or if you can have a plan to profitability, you become very interesting to people like these people.
Brilliant. Anna?
I think I'd probably echo what Hannah said there around kind of knowing your numbers, knowing your key KPIs, knowing what the bottom line is looking like. Outside of that, probably one of the issues I come up against quite often, it's not so much on the equity side of things, because we're there to help, but particularly with partners, is localization. So many of the challenges that brands are facing is because they didn't implement the localized teams or the localized infrastructure. And I deal with a lot of those kind of questions at the moment when they're trying to grow and scale and they're getting stuck. And I'd say, who's running your US business? And they'll say, my UK team. I say, that might be the problem. So that would probably be a piece of advice that I'd share with the audience.
Brilliant, thank you. And Georgia?
So you kind of stole my answers, guys. I'm literally echoing them, but we help such a range of businesses, from like if you're an Amazon brand doing 25K in net sales a month, to a business that's doing 100 million in revenue. But I'd say the one thing that credit in our company are drilling down on is profitability. Every time we take a business to credit, that is like one of the first questions we get now, which you can imagine isn't the easiest for a sales team, and especially in the climate. But yeah, if you are a profitable business, that puts you in such a better position to be able to get favorable terms from lenders like us. And also I'd really advise like making sure you really plan ahead. Don't go to the market when you are desperate for the cash, because yeah, they will take advantage of that. So yeah, that would be my advice.
Brilliant. Thank you so much, guys, for joining us today. Thank you.
Thanks.